Warren Pies, I'll bring you in. You say there were some signs of capitulation last week. Tony Pasquarello put out a note suggesting the same. Maybe it just looks a little different than historically we're used to.
Yeah, thanks for having me. Yeah, we upgraded equities at the end of last week to overweight, and we expect new all-time highs. Good chance to surpass 7,000 before the end of the year. I'll just give you a few things to think about. Our sentiment model, which is it takes like as many of the most important positioning and sentiment things that we look at. It's registered extreme pessimism, so that's important. Specifically, we look at inverse ETF volume as a way to look at retail capitulation. This speaks to something Mike was talking about. We saw inverse ETF volume spike up to the highest level we've seen in 2 years outside of Liberation Day, and those have always marked near-term bottoms. The other thing I would bring up is that under the surface, there was a lot of pain, really, in this pullback. Even though the index was down 5%, maybe a little more than 5% peak to trough, the median stock was down more than 16% from a 52-week high. So if you back out and look at what does that usually imply for the index, that's usually closer to a 10% correction. So when I put all of that together and then combine it with where we're going seasonally, I think we're set up for a very strong end of the year.
Mike, that mess with you?
Yeah, for sure. Tactically, that does all fit together. I do think that the idea that we sort of talked ourselves into this notion that the Fed was going to choke things off, and maybe the economy was seen to be a little bit weaker. We were looking on the
AI's a bubble.
The other piece of it, I'll say, is as we've been in this process, right? So we're at the levels the S&P reached October 9th or something like that, a month and a half ago. In that month and a half, we've gotten through an earnings season. We've rolled forward where the 12-month forecast is. It's higher, therefore you've sanded the edges off the valuation concerns to some degree. And so, yeah, I do believe that there is room. Again, whether it means we're going to get all exuberant again, whether this rotation toward the equal weight S&P, which is up 1.5% today, after, by the way, starting today at almost dead flat on a 12-month basis, that remains to be seen. But I do think you basically have to sort of, I always say, keep expectations low, but be open-minded about how far these things can go once they start to run.
Not to mention, so much for that narrative that the Russell can't get out of its own way, Warren. You look now, we've eclipsed a 10% gain year to date for the Russell 2000. We're at 10.7% now.
Yeah, I mean, it's encouraging. I think it's encouraging to see equal weight and Russell do well. I think you have to understand the bet you're making. If you're going to be long Russell 2000, it's very much a rates bet. So it's one of the things we decompose instead. Of all the subsegments of the market, the Russell is the most sensitive to these rate moves. So yeah, we're down to 4% on the 10-year. If you're long the Russell here, you're betting on rates continuing to fall at this kind of glide path lower and economic growth hanging in there and being sort of robust. It's a needle that needs to be thread, and it's healthy for one day to see it doing this. But again, this is not. I've been on with you many times saying this is not where I would put my chips right now.
Is the best hedge on all this gold again? Are we back? Are we going to be talking about this again?
Yeah, we like gold. We've liked it all year. I think this is a secular bull market. We had a 9% pullback. We went from record outflows of the GLD ETF, something we watch for retail sentiment, and now we have outflows. So it kind of goes with what we saw in the equity market. We had to go through something to work off this excess sentiment. You're getting these reports of Kevin Hassett being the next Fed chairman. I mean, we're not here to make normative policy. And my job is to navigate markets. But when I look at that, I think that when you have really an extension of the administration coming into the Fed, that's going to create the environment where I think gold is going to have another strong year next year. That's a conviction prediction for us.